If you do not earn in United States dollars, but you want to open a USD money market fund account, here are 5 things that you need to know about, which are likely going to work against you or not going to favor you so much in the new investment journey that you're thinking about taking. Yes, I know the United States dollar has this inflation insulation that you want to enjoy, but then there are a few things that you need to consider before you make that decision. If it's your first time here, please consider following, consider subscribing to enjoy more content on financial literacy, investment, and those other money-related conversations. And don't forget to leave a like as well. It helps to spread this to others as well. So the first thing that you need to know is that the returns on the United States dollar money market fund are so much lower than your usual Kenya shillings money market fund account. And if you've been keen with the reviews that I've been doing the last 12 weeks, the money market funds accounts in the Kenya shillings have been yielding an average of 14%, some going all the way to 17%. But the United States dollar money market fund accounts have been yielding an average of 4-5% per annum. And that one represents actually below half of what the Kenya shilling is returning. So if you're thinking about switching your Kenya shilling into the US dollar so that you can invest it, please include this thought when you're making that consideration. The second thing, it also has a management fee, the same as the money market fund in the Kenya shillings. But from time to time, the rates could be different depending on the company. Some would charge 2%, some would charge 2.5%, and others would charge much lower. But again, as I always say, this should not be the biggest determining factor of which company you should go to, because by the time they are declaring the return, they have already factored in the management fee and it has already been deducted. The third thing, which is also obvious, your US dollar money market fund account will still be charged withholding tax. It's still 15%. So there's nothing that you're going to evade the tax because you are on a USD money market fund. But as usual, remember that this is only charged on the interest that you get to make. The fourth thing that you need to put into consideration before you open that USD money market fund account is the unpredictable dollar. Perhaps that one we should change it and make it sound like the unpredictable shilling. But the main point is that the dollar today is 160. In a few weeks time it's 140. The other day it was 120. So depending on the time that you are depositing your money and the time that you might need to take back your money, because remember, a money market fund is supposed to be a short-term place where you park your money or where you are going to accumulate your money. And therefore, if I'm going to be subjected with the unpredictability of the USD versus the local currency, then it brings an element of risk into play. Because if I bought in while it was at 150 and right now the dollar has gone down to 142, that already means I'm in a loss. Even if I'm gaining or getting interest, I'm already on the negative. What if this was my emergency fund and I'd put in money while it was at 160 and right now it is at 138? Can you see that difference? That is what I was talking about, the unpredictability of the differences between the dollar and the local currency. So you also need to consider that when making the decision to switch your shilling or your local currency into the United States dollar to put it in the money market fund run by the USD. Last but not least, there's something known as spread, or the forex fees or the charges that you get to incur when you are doing the foreign exchange. Let me first address it from the point that you are making a deposit. These are Kenya shillings. I'm switching them into the United States dollar. By the time I'm buying the dollar, I'll not be buying it at 142 if it is at 142. Remember, if the dollar is 142, remember they are also there to make a profit. They're going to sell it to me at 147 or 148. And that is how they make a profit after all. So that is what is called a spread. And the time that I'm withdrawing, so I've received my dollars from the money market fund account with all the interest, and it is positive perhaps. But then at that point, when I need to turn it back to my Kenya shilling, there's also a spread. If the dollar is 142, I will buy it at a much lesser price. And that spread in between means also another loss to me. So that is also another thing that you need to consider. And that is the list of 5 things that I need to worry or consider when I am thinking about opening the United States dollar and I don't earn in USDs.